Hello students, this is Gurjit Luthra, your accountancy teacher. Actually, after finishing off the ledger, today we are starting with a new chapter, which is the cash book. But before we turn on to cash book, we must understand the meaning of the term subsidiary books. Subsidiary here means secondary books. So there are certain secondary books which are prepared along with the ledger to record some specific transactions. That means the transactions which involve a greater attention. So for that we prepare various books. The subsidiary books, we prepare the various books. These books can be, for example, to record the cash and bank transactions, we prepare a subsidiary book by the name cash book. And to record the credit purchase of goods, we prepare a subsidiary book by the name purchase book. And to record the credit sale of goods, we prepare a subsidiary book by the name sales book. Similarly, to record the purchase returns, we prepare a book called purchase return book. And to record the sales return, we prepare a subsidiary book called sales return book. So these are the various subsidiary books, the secondary books. So for the time being, our topic for the concern is cash book, how to maintain this cash book. Before we start with the preparation of actual cash book, we must try to elaborate the classification of cash book. Cash book is primarily of three types. The first one is simple cash book. Now what is a simple cash book, or it is also called a single column cash book? Basically all the transactions which are dealt in cash, only cash, I'm referring here only cash, I'm not involving bank here. For preparation of simple cash book, we have to take into consideration only the cash transactions. Whatever cash is coming in, whatever cash is going out, this is all what we have to record in this simple cash book or the single column cash book. That means it is recording only the cash transactions. Okay, then there's another cash book, the second type of cash book, which is called the double column cash book. It records both cash as well as bank transactions. That means the transactions involving cash as well as bank. This is called double column cash book. And the third type of cash book is called petty cash book. Petty means small. So there's a business whose transactions are running into lakhs of rupees, but now there are certain small expenses, very small expenses. For example, some refreshment expenses on tea, coffee, etc. Then there are certain expenses relating to cleaning. There are certain expenses relating to stationery, which are quite small. So for that sake, what the business do, the main accountant, what he does is, there is a petty cashier. A petty cashier means a cashier who takes into account the small transactions. What is being done here is that a petty cashier is given a certain amount at the beginning of a certain period. For example, for the month of January, he is given 5,000 rupees, that whatever expenses, the small expenses which are quite irrelevant, not exactly irrelevant, means they are not quite material for the main cash book to be handled. So these such expenses, for meeting such expenses, the petty cashier is given a certain amount at the beginning of a certain period, that he has to meet all those expenses. In case that 5,000 which was given to him, it is spent before the month ends, so he's reimbursed. He's reimbursed. So for that reimbursement, for example, he has already spent 5,000, so he'll be given another 5,000. This is called impressed system, IMPEREST, impressed system of petty cash. We'll be dealing with it when we'll discuss the petty cash book. Now we are starting with number 1, simple or single column cash book. Let's write the features of this simple cash book. The features are: A, it is similar to a normal cash account. It is similar to a normal cash account. Okay. B, it starts with to balance brought down. Is it okay? Next, Next feature of a simple cash book is all receipts. That means wherever cash is being received, that means on sale of goods, on receipt of a certain commission or whatever it is, in cash or receiving cash from the debtors. So all receipts in cash. I'm again focusing on the word cash. Only the cash transactions are recorded. Okay, so only the cash transactions recorded. All receipts in cash are posted on debit side, right? Then D, all payments in cash are recorded on credit side. Okay. E, the balancing figure shall be by balance carried down. Are we clear about the simple or the single column cash book? Now the format of a simple cash book, as I've already told you, it is similar to a normal cash account. So cash book, single column. Single column here refers to the amount column only. This is the format of a cash book. Date, particulars, here we write voucher number. Voucher number means bill number. Voucher number and then the amount. Debit, credit. Similar columns on the credit side as well. Date, particulars, voucher number, amount. So this is the format of a single column cash book. Are we clear? Now let's start with a practical illustration of this concept. Let's take an example. Prepare a simple cash book from the following. First, January 1, opening balance of cash 50,000. January 5, purchased goods for cash 10,000. January 9, sold goods for cash 5,000. January 11, deposited in bank 12,000. January 15, received from Raju rupees 18,000. January 27, paid salaries rupees 10,000. January 28, purchased goods on credit rupees 20,000. January 29, paid our creditor Simran rupees 3,000 in full settlement of her account of rupees 3,200. January 31, received commission rupees 4,000. So these are our transactions. Now let's make the cash book. Date, particulars, voucher number, amount, date, particulars, voucher number, amount, debit, credit. So always remember, this is the receipt side, whatever comes in to the business, and this is the payment side. Okay, so first transaction was opening balance of cash 50,000. Okay, so January 1, to balance brought down 50,000. Okay, next, purchase goods for cash 10,000. Cash is going out. Buy purchases. Now we don't have to pass the general entry. We'll directly record the transactions in this particular subsidiary book. So it is January 5, buy purchases 10,000. Then sold goods for cash. Cash is coming in. So that means on January 9, to sales 5,000. Okay, then January 11, deposited in bank. Cash is going out. Buy bank. January 11, buy bank. How much have we deposited in bank? 12,000. Then received from Raju 18,000. Cash is coming in to Raju, and the date is 15th. To Raju 18,000. Then 27th, paid salaries 10,000. 27, buy salaries 10,000. Next is purchase goods on credit rupees 20,000. As I've already told you, only the cash transactions are recorded in this cash book, so this credit purchase would not be recorded in cash book. Next, paid our creditor Simran rupees 3,000 in full settlement of our account of 3,200. So we'll write on 29th, by Simran, amount will be 3,000. Payments are recorded on the credit side and receipts are recorded on the debit side. Next, received commission 4,000. 31st, to commission 4,000. So that's all we have for this cash book. Okay, now we will balance this cash book. Let's balance it. Here the debit total is 55 and 22, 77,000. 77,000, and here the total is 10, 12, 22, 22 and 10, 32, 35. 77 minus 35, 42,000. This will be by balance carried down 31st. So this will be brought down on February 1 to balance brought down 42,000. This is the example of a simple cash book, a single column cash book. Now I'll give you a question which you have to do for your homework. Question is, prepare a simple cash book. Transactions are April 1, cash in hand. This is the opening balance, 1 lakh. April 3, deposited in bank rupees 20,000. April 5, withdrew from bank for office use 5,000. April 7, withdrew from bank for personal use 10,000. April 12th, purchased goods from Mohit for cash rupees 30,000. 15th, sold goods to Amit rupees 18,000. April 17, received from Amit on account rupees 12,000. 24th, paid rent rupees 10,000. Salaries rupees 12,000. 28th, withdrew rupees 5,000 for personal use. It's not bank. Withdraw rupees 5,000 for personal use. That means it has been withdrawn in cash. 29th April, received commission from Ram rupees 7,000. 30th April, paid into bank rupees 10,000. Paid into bank rupees 10,000. So please have a look at the transactions once again. Cash in hand 1 lakh. This is the opening balance. Deposited in bank 20,000. Withdrew from bank for office use 5,000. Withdrew from bank for personal use 10,000. Purchased goods from Mohit for cash 30,000. Sold goods to Amit 18,000. This is the credit sale. Received from Amit on account 12,000. Paid rent 10,000. Salaries 12,000. Withdrew rupees 5,000 for personal use. Received commission from Ram rupees 7,000. Paid into bank rupees 10,000. So these are the transactions. You have to prepare a simple cash book, and we'll continue with that discussion. Thanks.